Thank you so much for joining us on here today, Andrea. It is so good to have you here. And we have a whole lot of tax stuff to cover off. It turns out that one of the subjects that people find the hardest is accounting. So we might have to have you on regularly to answer all of these wonderful questions and everything that comes our way. So we have plenty to cover. But first of all, you're a business owner too. Do you want to give us your elevator pitch for your business and tell us a bit about what you do?
Oh, sure. It's my favorite thing to do. So, yes, I am the head honcho, so to speak, at Dream Accounting and Business Advisory. So, I'm the director there, and we are a very proactive and innovative firm, obviously doing the usual things that accountants do, but doing them better and doing them with heart. And that is just an elevator pitch I made up on the fly for you.
I love that. And if anyone does see your social media and stuff, you really try to make sure you're following through with that and have that values throughout the business, which is really awesome. Do you want to run us through your startup story and tell us a bit about your business and how that's looked and where you are now and just give a bit of context for the listeners around that?
Yeah, absolutely. It's not until you take the time to reflect back that you actually see how far you've come. This will be my 8th year in business, and
Wow.
got asked that the other day, and I had to actually figure it out because they just sort of fly by, and there's always the challenge that you're facing at any particular time. You never feel like you arrive, and so you forget to have a look and see where you've come. So when I first started, I left the employment that I was in, and I didn't have a single client. I had some good networks. And so I built the business based on the very first client. So I'm very proud of the fact that I didn't buy fees, so to speak.
Yep.
And I started out thinking, oh, I'll just do tax returns because that's what I know. I know I can do that well. And I don't think I'm good enough to do all the other stuff. I don't want to put myself under pressure. And so I did. I started doing that. And I soon figured out that I had been doing all the other stuff. It was the responsibility was the thing that was scaring me. So once I moved through that fear, I started taking on more and more business clients. And it's just been an evolution from there with the recruitment of teams who I could not do what I do without, through to just attracting aligned clients and really focusing on the delivery as opposed to just getting the job done.
Yeah. And how true is that? What are you talking about with your limiting beliefs? Is sometimes
Mm.
we're our own harshest critic and you put something off and put something off. And then when you actually do it, you go, oh, I have got this. I'm awesome. Like,
Yeah,
and 8 years in,
happens all
you've
the time.
obviously got this. Like, it's so,
Yeah. I mean, we do it for somebody else. We can do it for ourselves. We just, often lack the confidence. And that's not something that's just going to pop into our lap overnight. We have to build that. I think one of the most critical points, I was just thinking about this earlier in light of this interview, one of the most pivotal moments for me in my business journey was basically taking the spotlight off myself and it being about me. And when I chose to focus on being the best employer that I could, the best of service that I could, and it not be about paying the bills, everything changed for me. And I've got goosebumps just saying that because
I got goosebumps from you saying that. That's all.
it comes down to the values that you hold for what you're trying to deliver rather than making the next sale, rather than any of those things. The fear of how am I going to pay my bills is there. It doesn't go away.
It's not driving.
My level.
Yeah.
Yeah. But when it becomes not about that, it's easier to get up in the morning. Yeah. It changes everything.
And when do you reckon that happened? What point was this? 5 years in?
Yeah. So it's probably very early on in my employing of staff. I don't actually like the word staff. I like the
Yep.
word team members or something a lot less hierarchical.
Yeah.
Hierarchical.
Yep.
And it was, trying to work out what it was I was trying to give them. And in the end, it was about the same things that I want, but I wanted to be able to give the opportunity for that. It's a big responsibility, but it's a massive opportunity to have that ripple effect that we all want to have. And it was, so it was probably in the first 6 months of employing staff, because previously I was just a owner operator and I was in business with my partner at the time. So that was a whole new world to me.
That's awesome. And so 6 months into having staff. So how long, so from your startup point where you started up and it was just, you operating, and then
Yep.
what did it look like from there? When did you start adding to the team? Did you
Yes.
sourcing
So
first, or what was that?
No, I didn't, but I was working far too many hours and behind on deadlines. It was probably around 4.5 years ago now. So about halfway through the journey that we're where we are to date.
And that's
Yeah.
awesome. And what was the thing that we went, okay, now I'm at the point where I should add an inner team member? Was there
Yeah,
that you
well,
had to meet or sheer
for
necessity?
me, it came out of necessity because my life partner at the time and I separated, and she was working in the business, so there was a part of that. But even prior to that, it was getting to that point where there just wasn't room for more clients to come on because of like there's only so many hours in a day, and so to get that next level of scaling, if you want to call that, you need to start to let go of some of the things that don't require your expertise. And that's where I've gone to from there. And it's a continual process. I tell people every day when I mentor and coach to let go, but doesn't mean I can do it easily.
Yeah, absolutely. And now that you have been doing this for a little while, adding team members and building the team, is there something
Yeah.
that you would say to businesses that maybe is a catalyst point that they should look at where they go, all right, nah, this is the time where I should do it? Is there a hard and fast rule or?
I think that the biggest barrier to people doing it is the fear of the cost or the fear of someone else not being able to put the food on the table.
Mm,
And when I have ever had the opportunity to work in an advisory space with clients and I can show them how their capacity improves and how the overhead of perhaps a administrative assistant could be spread out over the capacity, they realize on a per service, per item that they're selling basis that the cost isn't that big. But the idea of finding another $1,000 a week or whatever is just too much. And because I think that the business model will stay as they are, or the business model needs to be this to be able to do it. Yes, there is definitely an investment in it. And if you can recognize it as that for the interim, then you will reap the rewards as you progress through. It's
yeah.
the fear that gets in the way.
So for someone that's thinking, shit, maybe, oops, don't know whether I should swear on this podcast, but if there's someone thinking, maybe I'm at the point where I do need to look at having staff, is the best thing for them to do to come talk to their accountant or someone like you that's going to run through those calculations with them and show them how that looks to
Yes,
be prepared?
absolutely. Yes.
Yeah.
And I cannot encourage people highly enough. And this is another thing that I will stand on a hill and die about is there is a big difference between having your tax return done or getting your BAS statement lodged, what we call compliance work, and advisory. They are two distinctly separate types of work that accountants are quite capable of doing.
Mhm.
But as an industry, we're not very good at telling people the difference, and clients seem to think that just by the mere fact of getting their tax return done, that their accountant would be telling them everything to do in business and how to, future-proof themselves. It's just not the way it works. So when we come to a decision to be made like this, it makes amazing sense to come and see an advisor who can be objective and step it out and look at those numbers.
So on that, that's a really good point because I think I'm telling businesses all the time. I've especially been talking to people the last month, obviously, with the end of financial year, saying, go talk to your accountant before tax time and stuff. So do you want to talk through to the listeners what the difference is in just getting your tax done and just the sheer necessities and that tax planning advice and what
Oh,
that
I'd love
looks
to.
like?
It's one of my favorite topics. Yes. So probably the best way I could break it down is that one of them is looking at the past and one of them is looking at the future. So we can't do anything about the past. We may be able to use a few things to minimize some tax and assess results to see what we can improve. But even that alone, without the advisory that goes with it, is not going to put you on the right trajectory for change into the future and strategy. It's all about strategy. So advisory is around scenario building. It is around adjusting things to get a different result. It's about growth. And for some people, they go, oh, I don't want to grow my business. I'm happy at this size. Well, how can we do what you're doing now better?
Mm.
It's about bringing the intention, the passion, the ambition, all those feminine energies that business owners have together with the masculinity of the numbers, which they play an important role. We can't disregard it. So it's bringing those two together and finding that balance, the yin and the yang, to move forward. And it's magic happens in that space when people all open up to it. It's not about a cost or an overhead in your business. Advisory is an investment.
Yeah, I love that. And so what does that look like? Is that something somebody would do once a year, or are they doing that quarterly with you, or or do they just check in when they need something? Like, what's the process?
Yeah, so it's a combination of all those, and it depends obviously on the client and how experienced they are and how much knowledge they have. I encourage people to be honest with themselves about how much they do actually know. There's so much that I've learnt in business about numbers that I didn't get from the textbook by doing my accounting degree. That was nothing where what I have to offer now came from.
Mm.
So ask yourself the question, even though I've been in business for 7 years, do I really understand the concept of GST? Do I really understand marginal tax rate? If you don't, just put up your hand and ask, because that is fundamental to understanding and talking on another level with your accountant to achieve massive results.
Yeah.
So it's being honest about that. So a lot of my work is from an education perspective. So depending on what part of the journey people are at and what they'll admit to what they know will depend on how much they would come and see me. So we do things all the way through from, regular coaching and group sessions through to one-on-ones, what we call strategy appointments. Some people it is just once a year towards the end of tax time so that they know what provisions, what strategies they might be able to implement. It's more around having the awareness of what the liability will be rather than going out and buying bright, shiny things these days. It's changed a lot. But yes, I have plenty of clients that meet me quarterly where we can calculate year to date what their tax looks like so they can say they've got that put away. I do a lot of work in cash flow strategy and management where I have some different techniques using different bank accounts where people can just be at ease. I find
That's like
the biggest challenge.
putting your tax and GC aside and stuff like that, so people know where their money
That's right,
is.
but they don't know how much it should be. I can teach them to calculate it.
Yeah.
It's a language that people don't know.
Yeah.
And it's okay to say you don't know it.
Yeah. And I think the other thing
Yep.
with it as well is, as a business owner, we lose that accountability to anyone because we're at the top and there's no one else that we answer to, but also no one else for direction. So I guess the good thing is if you've got a good relationship with your accountant, they can help give you that accountability to keep you on track and go, last time we caught up, you said you wanted to achieve this. How's that going? What's that looking like? Why haven't we got there? And be that person for you, which is pretty special because you sort of
it's
get a bit lost
beautiful
sometimes.
relationship and the trust involved as well. But I think what a lot of people like about working with me is that there's no judgment there. I'm in the trenches, I'm doing it as well. And I make just as many mistakes as the next business owner, but it's a journey. It's not a destination. And so when we can appreciate it for that, we just sort of go, look at what I did, look what I didn't do. And it becomes a camaraderie as opposed to a competition.
Yeah, and I think that's like we've all got stories to share, and if you take that ego out of it and
100%.
just work with people
Yeah.
and just share with people, then
Be
it's just
vulnerable,
beautiful.
lean in.
Yeah.
Yeah. Don't try and pretend that things are better than they are. Let's just find solutions to make them.
Yeah, exactly. So now if we're a new business, if someone's just starting up and they're wanting to know everything that they would need to know about accounting, which is a pretty loaded, heavy question there.
Yep.
Where would they start? I guess, maybe we start with business entities. Let's talk through what a business entity is and what options they are, and then we can work through from there. That's probably a good place.
100%. More than happy to do that. If I get too waffly, just let me know.
No waffle. We're here for it.
So basically, we need to decide what entity we're going to operate in. And what we mean by entity is almost like a person. So it may be a natural person, Sarah or I. It might be Sarah and I together, which is a partnership. It might be a proprietary limited company, which is its own being of itself. Or there's a few other ones such as family trusts and whatnot. There's a combination of all of these things. And what we need to remember that each of these entities is its own thing and has its own tax file number, ABN. And there are different reasons for using different structures for different businesses. One of the most important things that we address is the likelihood of the business being enduring and its viability. We need to look at what kind of assets each of these people that are involved have got in their own name that we may need to protect should something not go to plan. And we need to look at whatever else is happening in their circumstances where there's tax payable. For example, we wouldn't start a business between two people as a sole trader when that same person has also got wages. What we would see there is two people doing business and one person paying a ridiculous amount of tax. That doesn't work. So it's really around looking at those circumstances with an educated mind to decide which is the best structure. We also have to be really mindful that we don't do make decisions based on here and now that may adversely affect us into the future. We need to balance up both the short term and the long term. So we've got a sole trader, which is, the name represents, a single person. And when we do a tax return for a sole trader, it's the same tax return as we do for an individual just working for wages, just a separate part of it. So it's the same tax file number. You don't need a new tax file number for a business operator as a sole trader. Now, when two individuals, and it can be other entities as well, but let's keep two individuals go into business together, that's known as a partnership. And the partnership has its own tax file number. Both of those people will pay tax on the partnership profit.
And how many people can you have in a partnership? Is it
Up to 25.
Up to 25? Wow.
Okay. 25 last year.
Jeez.
Yeah.
Yep. All
Look,
right.
we don't use partnerships very often.
Yep.
While they're simple to set up, they're messy and they don't protect people well.
Yep.
Yep. So then we look at maybe setting up a company, and that is great for protecting assets because, like I mentioned, the company is its own beast. So if something happened, it would be sued as opposed to an individual. The problem, well, one of the biggest things that oversight that I find people have with companies is that they think that they can pay company at the tax rate, which at the moment is 25%, which is awesome. They think that money is theirs as well. So pay 25%, buy new boats personally. It doesn't work that way. So if we're paying tax in the company, the money must remain in the company unless we take it out and pay additional tax on it. Makes sense.
So that's saying, all right, well, I paid rate as the company in their own entity, but as soon as I take it out, then that money becomes money that goes onto my entity, as in Sarah.
Correct.
And then
that's right.
Whatever the amount that is, then I pay at my marginal tax rate.
Correct.
Yeah.
Now, the company may have paid their bit of tax on it, in which case you might get a credit.
Yeah.
But the reality is that you don't just get to take it and that's not how it works. And people are like, why wouldn't I go into a company if I get to pay 25%?
That's good.
Most people's marginal tax rate's up about 37. Yeah. And then we talk about a discretionary trust, which is probably one of the more common ones that's used as an entity for business trading.
Mm-hmm.
The difference between a company and a trust is that the profits of the trust are distributed out to what's called beneficiaries. So this is often family members. Now, it gives the same sort of asset protection as a company because it is a separate entity, but in terms of paying tax, we would be giving it to beneficiaries. It is at the trustee's discretion, though.
With the asset protection there, what we're saying is if somebody wants to sue your business because of whatever reason, when it's in a company and a trust, they're suing that company and trust because that's its own entity versus if it's a partnership or sole trader, you're getting sued. So that's why we want to consider those options. And
that's exactly right. So there's some things that you'll never be protected from.
Yeah.
And the analogy I use, and I don't care if you don't swear, I'm going to. If you fuck up bad enough, you're going to go. And I highly encourage swearing in podcasts.
There we go. We've broken a barrier, guys.
Pop that cherry.
That's it. It was bound to happen. I reckon it can happen.
So yeah, like there's some things that can't be protected again, but the best part, it is that entity. So that entity's assets, there may be some assets in their business assets will be at stake, but the owner's house shouldn't be, and the owner's boat shouldn't be. Whereas operating as a sole trader, you get sued. You are the business is you. Those personal assets can be accessed.
So that's something really important people should consider. And I guess that when people are starting out with these different entities, I know that a lot of the times it seems simpler to jump on and set up your own ABN and just run as a sole trader. Is it better to set it up as you are planning to run it? Or is it easy enough to start off as a sole trader at the cheapest option and then transfer to a company or trust? Or
yeah, look, it's mostly my recommendation for people, and it depends on the industry. I would never suggest that a builder was ever a sole trader. They're a risky industry that things go wrong, as opposed to a service provider that starting as a sole trader to make sure that they're okay with that whole idea of self-employment may be a really good option. The risks are actually much lower. Chances are there's not very many clients. There may not be employees that want to sue them. That's another avenue that we need to be careful of. And so we can start out in that space to see where we are. We have concessions available that allows us to transfer our business to another structure from a sole trader or partnership tax-free. So that is good to know that we have that up our sleeve. Because once we set up a company, just like I said, that it's its own entity, it doesn't just go away if we decide to not operate anymore. It continues to exist, and we actually have to do things to close it. Whereas a sole trader can just simply stop trading and cancel an ABN.
Yeah, okay. And another benefit as well is, I guess, the flexibility with income and tax and stuff. So, like I think you mentioned before with the partnership, if one person's working and they're in a partnership and they're earning a wage of 70,000 or whatever it might be, and then they're taking a wage from the business, they've got to take their 50% because they're 50% ownership in the partnership, and then that gets added on and they pay more tax on that. How would that sort of scenario differ if they were to set up under a trust or a company? Like, what benefits would they see?
Yeah, and this is the great flexibility that comes with some, and one of the other benefits of these type of entities is that we can have a couple of different options. We may be able to pay someone wages from our business and make that particular part of the income taxable to a particular person. In the case of a discretionary family trust, we can, at the trustee's discretion, distribute profits to beneficiaries, which is a way of getting business profits to potentially the lower income earners. And it's really helpful with families having children, and we are fluctuating between different people taking time off. The biggest hurdle with this, and that's often left unexplained to people, so I am going to bring it up, is the issue of what's called personal services income. There's special legislation that prevents people from diverting income to people that aren't actually doing the work. So they don't have an issue with you having a company or a trust to protect your assets. They're actually okay with that. I mean the tax office. What they do have an issue with is Andrea, the accountant, who does all the work, deciding to pay her son that is 19 that sits at home all of the profits. It comes down to whose personal exertion is it. If it's your personal exertion, the tax office wants you to pay tax on it. Compare that to someone in the business of selling headphones. Selling headphones is selling an item. So those business profits can be distributed however we like. It's not contingent on someone's brain and expertise.
Yeah, that makes a lot of sense. So, for you, you couldn't go, all right, well, I've got my son sitting at home doing absolutely nothing, and maybe I can finally get some money back from these children and decide to send money over, because they would go, no, we can see that Andrea is the accountant doing all the work. Maybe he could get a wage as an admin person or something, and he could
Correct. Yes,
something.
there's always flexibility,
Yeah,
and there
yeah.
is limits to it.
Yeah.
And there is some businesses like part product, part service.
Yep.
Yeah. So when my business first started and the journey we've just explored,
Yep.
even though I was operating a company, I couldn't tax the company because those earnings, they really belong to me. The reality is, in those circumstances, I'd be wanting that money out to put food on the table anyway. So it comes as wages. It usually just works out that way. But if I wanted to try and take advantage of that 25% tax rate, and it was only me doing the work, the personal services legislation kicks in and says, no, you can't. Doesn't stop people doing it, but the right way is
Whether it's right. Yeah, that's it. So, all right, we're a new business and we've now chosen our business entity by considering all those things and sitting with our accountant to work out what to do. What next? The accountant sets all this up for you?
If we're talking about an entity, then I would definitely recommend using an accountant, because we just want to make sure that certain things and certain roles are taken by the right people so that we can limit further exposure. So I had an instance the other day where someone says, oh, I can do the company online, can't I? I said, yeah, sure. Who are you going to issue the shares to? And she went, So yes, you can, but would you want to take that risk? Because that thing's going to be around forever. It's just, even if you do think you know the answer, the clarity and the resistance that you can get rid of by getting that professional advice is priceless.
Yeah, absolutely. And especially like something like that, because if they then need to change the person that owns the shares, and you've got your capital gains tax, all these wonderful other things that come into play. So
absolutely. And
just having that conversation. Yeah.
Having the conversation every time. I've got no issues with sole traders going and getting their ABNs. It's one of the most exciting things to do up there with choosing a logo. It's when we do things like GST registration, where I have
so there's another thing.
Registering for GST, and one, they don't need to. Two, they don't know how to charge it.
Yeah.
and 3, that they've given the wrong answers to things and they've locked themselves into something that's like hard to undo.
So that's probably a great segue because we are probably considering GST at this point too, and whether we register for that. Is it something that businesses should register for at the start? Should they wait till they get to is it 75,000
75.
threshold?
Yep.
So do they wait till they hit that turnover before they register? What would that look like?
Yeah. So my biggest advice is have a think about who your customers are and who's likely to be predominantly buying from you. And the reason why I say that is because I'll circle back to it actually. We have an obligation if our turnover in any 12-month period is likely to exceed 75,000. So it's a looking forward rule. It's not financial year. It's a 12-month projection. Now, when we start to hit figures of $6,000 and $7,000 a month, we'd be going, right, we're nearly there. Now, for some people, we might be able to push the boundaries and not do it too soon. Others, it's like, we're there, let's just register and charge it. Because obviously there's other costs involved with completing BASs to report that to the tax office. Now, when we're talking about an industry that has to charge GST on their services and the end user can't claim it back because businesses that use a business expense that has GST can claim a credit, then we have to be very careful about how we go about it. So Granny doesn't care that that you have to register for GST and her haircut now costs $33.
Mm.
She doesn't care. But unless you charge $33, you're going to lose 10%.
Yeah. Yeah, that's it. So you've got to decide whether you're going to increase your prices 6 months in and how everyone's going to react to that. Or do you just go, all right, well, even if I am going to register later, I set my prices as if I've got GST in and take that extra little bit of profit, which is not so bad as a
strategy in itself.
Yeah,
Yes.
that's it.
So, and it comes down to, and it's like an understanding of how the system works. So if Sarah was to charge me an invoice for business consulting, I'm registered for GST. It doesn't make any difference to me whether she is or not. If she charges the GST, I'll claim it back. If she doesn't, there's no GST to claim back. It's indifferent, but not every industry is like that. And I would suggest that most business owners do not understand GST well enough. And I break that down.
Yeah. So I think out of that, if you're selling business to business, 100% register for GST from the get-go. Well, maybe 95% or something. And then, but if you're doing business to consumer, that's maybe where it's worth the conversation to go, do I register for that? Now, once we... sorry, you go.
The only disclaimer to that is to consider the compliance costs involved with registering for GST, even if you are B2B.
And the compliance cost is talking about BAS and having to start doing BASs and stuff like that. So that's the lead into that one. So you've got this sorted. Now, BASs, this is one of the things that I got a few questions about is, what is a BAS? What does it mean? What do you have to do?
Yeah, so BAS stands for Business Activity Statement. And the BAS statement is a form, mostly electronic these days, it's issued by the ATO for you to report your obligations. Now, those obligations are determined by what registrations that you have with the ATO in any particular entity. So the registrations that you might have is the obvious one that we just spoke about, which is GST. You might also be employing staff and having to withhold tax for them. That's known as PAYG withholding. And then if you've been paying tax in the past, the tax office like to get you to pay your next year's tax in advance, and that's called a PAYG installment. I don't know why all the PAYGs, but they are. So depending on what registrations that you have is what boxes will appear on this form. And depending on how high these amounts are, whether you're obliged to do it monthly or quarterly. So people refer to BAS fairly generically, but it can be any one of those things. So you may not be registered for GST, but you have staff and withhold tax, you will still get a statement.
Yeah, okay. And PAYG is the...
confuse it, but...
Yeah. That's the thing that I think catches a lot of people out because we sort of know that we've got to put aside the GST and then they get their first PAYG. They go, oh, God, like, what's this extra tax?
That one?
Yeah, exactly.
Yep.
But, yeah, and so that kicks in after a year of trading, the PAYG? Is that how that...
The PAYG installment's based on whatever the last tax return lodged is. So if I'm in business for the first time and I pay $4,000 tax, and I lodged my tax return on the 1st of July, then for the next 4 quarters after that, in anticipation of that year's tax, I would be paying $1,000 per quarter. Now, that doesn't mean that I'm going to make that amount. I may well end up with a refund, or it might not be enough because I am smashing it. But it's something that the tax office is required to make sure that we have a provision.
Yeah. It's all a lot of fun. All right. So at this point, we're a new business. We've chosen our entity. We've registered for GST. We've got our head around BAS, and we know that we need to now do BAS as quarterly or monthly. What next? What does then a business owner do to manage their money, and how should they set it all up? And God, there's so
Amazing.
much in that. But yeah,
Yes.
where do we go from there?
Yeah. The first thing I recommend, well, there's a few things that I recommend for startups to get the right foundation. The first one is bank accounts. There is no better way to manage your business finances than to have a separate business account. Now, that business account should be in the name of the entity that we're trading from. So if it's a company, we want a proprietary limited name. If it's a sole trader, doesn't need to be a business account, but we want that to be in a personal name as opposed to a joint with your husband, wife, whatever. The way that when we do that, we can make sure that the income we're deriving and the expenses that we're incurring are paid and received through that bank account. The biggest part of this is that any that we want to take for ourselves, which we're quite entitled to, take it out and deposit to another account and do all your personal spending outside your business account. This is
Yes.
the best advice I can give.
I
And
100%
then
agree with that.
nice, clean account that simply gives us a snapshot of what's going on. We're not going through Kmart and Dan Murphy's trying to work out if they're business expenses or not. And your accounting fees will be less, your bookkeeping fees will be less, and there's less room for error. So that's the biggest one. And if we get that set up from the get-go, you're halfway there. The next step after that is getting some accounting software. Now, most people will go, oh, I don't need it. I can use a spreadsheet, or I'm going to go with the cheapest option on the market because they all look the same, and they do all look the same. Getting good software that you can be taught how to use will help you grow your business. It is a really helpful tool that is most unused because people don't understand it. It's a means to an end, and yeah, I couldn't live without mine.
Yeah. I'm a massive Zero fan, so if
Yes.
anyone asks me, I'll recommend
100%.
that. But
And so will I.
every
Every day of the week.
need to know your numbers as a business owner, don't you? You need to know
Yep.
where that
Exactly.
money's
You need the
going.
aim again, yeah?
Yeah.
We can be ambitious, we can have big goals, but we need to learn the language to make them come together.
When somebody's setting up their business, is there a certain amount of money they should have sitting there in cash on hand? How would a business know where to start on thinking about that?
Again, it really comes down to the type of business. Service-based businesses that are just relying on one person, there's very little startup costs that are needed necessarily. But someone that's going to buy stock or equipment, there's definitely a cash investment that's required, or lending that's required, can make it really difficult and full of pressure if you don't have a buffer. So it's a bit hard to say a dollar amount or even a percentage, but what you want is to be able to breathe and set yourself up for success without the fear of generating. Nobody makes money from a place of commission breath. We can't do that. It doesn't work. So when we go, all right, I anticipate I'm not going to generate sales for a month. I've got a month's worth of wages, business expenses sorted, takes the pressure off, and you'll find that you actually will end up doing better.
Yeah. So well, just my personal thoughts on that. Like, that's probably a good rule is go, all right, we want at least a month, but maybe 3 months is a good amount. Maybe,
Yeah.
and this is going to be dependent on you. But if I was sitting there thinking about it, maybe go, all right, well, if I have enough money in there to cover the expenses and your income for 3 months, because you've got to be able to survive. Because like you said, by the time that you're starting to work on that, just trying to survive, you might not be in the best place mentally and for doing business.
No.
So maybe that's a good sort of goal that people could sort of.
Yeah, absolutely. If people can do that, I'd highly recommend that, because we beat ourselves up about not having it or not making money.
Yeah.
For people, it's not going to make money. This is an investment. It takes time. If it was that easy, everyone would be doing it. So we need to be looking at this like an investment. People get upset that, I have to transfer $500 into my personal account to be able to pay the Telstra bill. Welcome to the club. That's what we do.
So
We
what if a
have
little
to go
business of it
through
is?
this journey. Yeah. It's not, we're not buying a McDonald's that is most of the time set and dry. Even they won't, continue to make massive profits initially. There's always this period of uncertainty and the journey that you can only ever learn by doing it. A
Yeah.
little bit like childbirth.
Yeah, yeah, that's it.
So you can read all the books, but for any of you out there that
Until you're doing it. Yeah.
no smelly candles or bouncing balls makes any difference.
Ain't that the truth? That's a very raw memory.
Yeah.
So all right. So we're now knowing we need to put aside that 3 months when we're doing our, I guess, projections and cash flows before we start a business and going, all right, well, let's make sure we account for that. That's really good. Perfect time for one of our listener questions. Renee asks, how to account for personal tax and GST, what and how to put it aside. So back to our bank
Yes,
accounts.
this is a massive one. And I find this is the thing that stops people putting provisions aside for income tax because they don't know how much.
Mm.
So the way that I work with people is that let's look at something that's quantifiable. We always know a dollar that comes into our bank account. That's the same, regardless of where it comes from in terms of income. So let's work on percentages of that because we can work that out. So if that dollar comes in and that was the only dollar that we had, then we would have to pay, if we're registered for GST, 10% of that is GST. So we take 10 cents out, well, $1.10, 10 cents out, yeah? And then we're left to go, well, what else have we got to pay? We've got to pay income tax. We've got to pay our expenses. And so what we do is we try to work out a percentage of what is likely to be needed out of each dollar. And when we work from that space, we can quantify and be able to put distinct amounts aside. What we do for income tax, and this is the question that was asked, is if we work out what your average rate of tax is, because anyone that has seen the marginal tax rates would be like, I have no idea what I'm actually paying. So at $0, we don't pay any tax up to about $20,000. Then we pay 19 cents in a dollar. Then we pay 32. And you're like, well, I don't know. So we work out based on an income and what you actually paid tax on, what is that as a percentage? And it may end up being your average rate of tax is 25%. Put 25% of your dollar that came into the bank account.
Yeah.
That you can calculate. That you can do.
And so
It's
for
where the
finding
bank account
percentage, they might go like Google tax calculator or something and put in what they expect. So if they're expecting their income to be 70,000, chuck in that 70,000 to a tax calculator, find out what that tax is and go, all right, well, if that's 15,000, we're paying tax, 15,000 over 70,000 gives us whatever, 20 odd %. Bang. That's add that in. So that would be that exercise and how that would look.
Yeah, that's right. Because when we say it's $200 a week, that's not helpful.
Yeah.
Because your income might be like, it could be anything. We need something that can fluctuate with the changes. We don't always know what our profit is, so we can't use that because that's ever changing. But the constant is the one at the top where we can work with that. And I have people that are putting 37 cents out of every dollar aside because that's their marginal tax rate. But that's far too much. Then they beat themselves up that all they do is pay tax or put money away for tax. They don't have enough for their expenses. That's because you're putting too much aside. And this is the advisory space, people.
Yep. And this is, I guess, another reason to get on the phone to your accountant and just ask them the question because it's something that you're doing all the time. So you just take for granted that you get this. But they won't be looking at the marginal tax rates all the time and won't understand.
People don't even understand them.
And
that's okay.
That's exactly. Yeah. That's it. So, all right. So then we go, all right, that's all up. GST and tax is 25 or 30% of my income. So once a week, fortnight, month, whatever that business suits that business for their cash flow, they just set up a regular transfer from their normal bank account into a tax and GST account. That's what you're...
Yep. I have separate ones for GST, separate for income tax, two separate things. There's a regime. Yep.
Yeah.
And then, the more staff we have, we start to have a separate one for payroll where we can pay our super from.
Yeah.
There's a lot
of good super. This is my
Yeah.
finance background, but I
So
definitely think everyone should start paying super from the start to make sure they're,
yeah,
especially women, we already, undercut ourselves so much with having kids and all that wonderful stuff.
yeah,
So when you start, add in your wage and add in your super. So you're getting that in there
that's
as
right.
well.
Yeah.
So,
But get clear direction. If you've got a roadmap, you've got a strategy,
yep.
and you can move forward with confidence. When you are left floundering, not knowing what to do, and you talk to the people at the pub, you're screwed from the get go.
Yeah. And so back on
That's harsh.
payroll account. No, back on that payroll account, that's going, so for each employee you have, they obviously pay tax themselves. So are you just
Mhm.
putting aside their tax into that account so you know it's out of sight, out of mind?
So basically what I will do and what I'll encourage clients with staff to do is be looking at allocating from that top part, our income, the amount of gross wages. So the amount of gross wages is inclusive of the tax. So you pay out of that payroll account, you'll pay the net wages. And then from that payroll account, you will transfer the tax component that was part of your BAS over to your GST/BAS account. So that balance in the GST/BAS account will always be exactly what your BAS will be. In fact, it'll be more because you'll be able to claim GST back on some expenses. So if you're doing that, you're actually recognizing the cost of wages for its true cost, as opposed to just having enough in the bank to pay the net wages that
Yeah.
payroll tells you.
Mm.
But you haven't taken into account the superannuation or the fact that you will need to pay that tax once the BAS is due.
Yeah. And then what about profit? Should people be like, I guess businesses either have one or two ways of looking at it. It's something that just happens at the end of the financial year and go, oh, I had this profit, or it's something they plan for. What would you suggest and how would that look?
So yes, look at I try not to put too much pressure on startup businesses to be achieving that,
Yeah.
but there definitely is the whole concept of providing for that first and foremost, and that's the basis of profit first, is that we would allocate what we're entitled to as a business owner first. So we feed ourselves first so we can feed others. So it's sort of a combination of those, and I generally gauge it by how people are feeling. So the first thing that I do when my income comes into my account is I split off the GST. Then I take 5% of what that turnover is and I put it into an account called profit. Now, in my business, I share that profit with my team members. But for others, it may be at the nest egg that makes you feel like you're making a difference. It can do different things, but what it is splitting it off first. So if we get to a point where we're having to rob profit to pay full, then we've got an issue we need to identify and it becomes apparent. But the warning to this is that this is where that buffer, that 3 months, 1 month's worth of expenses comes in, because while the books can sometimes tell you that from the get-go you should make a profit, the reality is we need to put an investment in. There'll be things that we need to pay in advance. There'll be things that don't work, and we have to be prepared to lose a little.
And so when we're doing that, what is there a rule about, is it 1 year that we're 2 years? What point should we go, all right, this business is just not working? And
Yeah.
like, what, where would that be? Would it?
So the exercise that I would do to work that out basically comes down to, like, again, knowing your numbers. So what we want to look at things on a micro level. So when I work with clients in this capacity, we'll look at each service that we might be offering or each product that we're selling, and we'll look to see what the profitability on that is. If that's enough, then we set aside that's okay, because we've got a few things at stake here. We've got either a cash flow issue that can just come about by lack of capital, or we've got a profitability issue. So the profitability issue can be from lack of demand. If that's the case, we've got an issue, but if we can identify that that's an issue, what are we going to do about that? But the profitability is sound. And then otherwise, it could be a profitability in the product service's own right. So by the time we add our overheads to it, there's not enough cut there. And it's not until we go back right down into the numbers, each profit, each service, that we can even see that. It's the most liberating exercise that can be done.
Yeah, I love that.
So
Now,
for
I just,
example,
yep.
for each hour of chargeable time that my accounting practice builds out, I actually have about $130 per hour of overhead expenses. So if I charge $130, I'm not making any money. So, and everybody's overhead provision is different. People that work remotely will have a lesser one. People that, have high marketing expenses, theirs will be higher. It's a game changer.
So really, we need to know our numbers because it's only then we can start really being strategic with growing our business. That's
Yeah,
so
100%. And the thing is, and I can tell every startup business in the world this, you'll have to experience for yourself. But once we make decisions and we set prices in, it's really hard to get what you're worth after that. So having someone objective like me, look at it and say, this is what it's worth. This is what you need to charge to make a profit. Stand strong in that. If the market doesn't accept it, then your business isn't viable. Don't get into the habit of doing this discounting, taking everything at all costs. It will bite you in the ass eventually.
yeah.
So
So at the start,
Yeah.
people should sit down and maybe write what their costs are going to be to set up the business and also what their ongoing expenses and costs are going to be and
Yep.
come up with a bit of a rough plan. And then they would come in and show you that and go, all right, well, this is what I'm thinking. Let's now break that down and take it to the next level so we can look at that cost
Exactly.
to serve and all that
So
sort of thing.
what I see happening more and more that I don't agree with is that we will go sales less expenses equals profit. What I want to see, profit less expenses equals sales, or whatever the equivalent of that is. So we switch the equation around. The sales amount should be a result of what we need for the other two, as opposed to leaving us with what's left.
Yeah,
And
so
that's
it's
kind
not
of
just
back to
setting the
that
price
you're
and
talking about.
going, oh, this is the industry norm. They charge
Yep.
$150 to service a car, so I'll charge that.
Yep.
I'm gonna go,
Don't care.
no, we don't care. We've got our blinkers on. We're looking at our business and
Yep.
what that's going to be. So, and if
Right.
you don't get customers based on that rate, then it might not be worth doing. And
That's
just need
exactly
to
right.
simplify.
And that's when we come down to standing in our power and the very thing I spoke to you about. Am I, the employer of choice? What do I offer that's so much better? I mean, we all talk about it, but what am I doing that's stand out, that puts me over and above? And it's not necessarily something tangible. Stand in your power, or look at the other people and go, just because they're not doing it right doesn't mean that I shouldn't. Because you have an obligation to run a sustainable business.
Mhm.
You have an obligation to your staff to do your absolute best to keep them employed. And if you're not looking at your pricing and charging appropriately, then you're not meeting that. Harsh words again.
Yeah, no, it's important and it's hard to do as a new business owner. I think we always undervalue what you are worth. So, and I think
Yeah.
it's probably at least an episode just in that alone and so much more. But we are hitting
Yep.
almost the hour mark. So I reckon
Wow.
we go through, I know, we can talk. I've got a few more listener questions that I just want to make sure we've covered off for
Yep.
everyone. So Jess asked, how do you know what the best structure is for you? So I think we've covered that off and we've gone through the different
Yep.
entity types and it's,
Industry, risk, and longevity of business.
yep. David asked, does it cost money to set up and maintain an ABN?
No. In a nutshell, no. If the HO doesn't charge any money for that, any assistance from experts will.
Yeah. So really it's not, you're not having to pay money to do that side of it. It's just to get the advice and the tax accounting advice and get your tax done. So you might have
That's right.
a fee that you've got to account for to set up the business if they are going
Yep.
trust or company or
Oh, yes,
depending on
that.
what option.
Yes.
And
Yep.
that might be like, what would be the range that people are looking at? Like, would it be a few grand sort of thing? What would be
Oh,
be a
for
ballpark?
structures, yes.
Yeah.
Yep.
Yeah. So it
A
would
couple
go,
of $1,000 to get everything that's needed for that.
Yep.
ASIC charge a fee both for a trading name, which may be what David was referring to. So that's to have a trading name attached to your ABN.
Yep.
And when we get into structures, there's a lot of fees involved and expertise in setting it up. But for the simple part of just having an ABN, there's no actual cost for that. So
yeah, awesome. So it's more, accounting, upfront, ongoing costs, but no cost for the ABN. Brandy wants to know, she wants to know everything. So strap in, Brandy. We might be here for a little bit. Where do you start to know and what to do with tax? So I think we've covered off that pretty well. I think let's recap. So first of all, they want to choose their entity, register for GST, get their accounting software, set up their business bank accounts and do the structure that we were talking about, start planning some cash flow.
yes.
and then go from there. That's sort of what we've covered off in this episode. Is there anything else
Yeah,
that
and
you've
look,
covered off?
it depends. I hate using the word depends because that grey area just makes everyone uncomfortable. But depending on timing of how long this business has been going for, if we're 6 months in and that's the only income you've had all year, then you've only got half a year's worth of income.
Mm.
We talk in the years. So this is where the conversations are important. If you've only done 3 months worth of trading and no other income, then I wouldn't be suggesting that you need to withhold 25% for yourself. It's just you won't be paying tax that year.
Yep. And I guess that's the other thing about the monitoring. Like, it's just because we've set it up one way is it's set in a
Constantly changing.
Yeah. Yeah. So
Yeah. And the
working,
way that you see that is by having software and knowing
Yep.
your numbers.
yeah, which again is another episode in itself that we're going to have to go
Mhm.
through. So just last one for you. Is there anything else a new
Yep.
business should consider when initially setting up?
Initially setting up, you need to recognize the need for investment. So there's so much hype around doing things on a shoestring and trying not to spend any money that you don't need to. Appreciate that Rome wasn't built in a day. Appreciate that you need to invest time and you need expertise and that it's not just super simple.
And that's
Because
the
that
thing,
would
if
be
you're going to
much
spend
stronger.
money on one area in your business, setting up this right is probably the area that I'd say
Yep.
is worth
Yep.
investing in. You know, you
You've
might
got
do
your different
DIY
pillars.
marketing or whatever else, but this is it's
Yep.
important.
Don't be afraid to spend the money, to invest the money. It's not an expense. Lean in, work out what you need, and like trust your gut.
Another quick question that was I just thought of then. How would people look for a good accountant? What should they be looking for when they're looking for a business account?
It's a really good question. It depends what people want. A lot of people have moved away from the need to dress up when they go to their accountants. Back in the day, that
Amen to that.
accountants must wear ties, and it was like a day out to go to the accountant. Look, for me and the people that I align with, it's the ability to have a vulnerable conversation and not feel judged. So ascertaining what that is should be, I would think, in the interim by way of a discovery call, get a feel for it. There is some accountants that specialize in certain industries. We don't necessarily agree with that because we know what we're doing. Business is business. It's around, you're looking on websites and you are drawn to someone, trust your gut. Yeah.
Yeah, I love that.
Yeah.
And most importantly, where can our listeners go to find more about you?
Oh, all of the places. Social media, Dream Accounting and Business Advisory. We are Facebooking it up. We are on the web. That's where our most beautiful pictures are. www.dreamaccounting.com.au. You can also follow EP Extroverted Accountant on Instagram and Facebook, the other one, as I do some pretty crazy out there stuff in my own right.
Yeah.
More now that the financial year has ended.
Yeah, you're just about to go into a hole for the next few months of doing
I know,
it,
most people
so
are going, oh, you ready for next tax year? Well, I'm just getting over last.
yeah, that's it. You're going to be busy. No, we really appreciate your time today, and I honestly think we've only taken the first layer of an onion. So hopefully
Yes.
we can get you back on and start talking about, because I think this exciting stuff we got to in the end was really like that, working out your percentages and your profits and
Yep.
operating costs and all that, and knowing how to apply that. I think that's the stuff that takes businesses to the next level and makes people feel really empowered in making their business. So I would love to get juicy stuff.
Yeah.
We'll open a bottle of wine and run through that for another hour. So
That's right. I know how I'm going to go. If you could only see me, I'm here with my hands and yeah.
there'll be wine
talking
everywhere.
very elaborately.
Yeah, we need to have something in podcasts that people can see all the stuff that goes on behind the scenes.
Yeah, I'm so used to drawing on my blackboard. I'm like, how do I explain
I
this
need to
at
do
work?
something. Yeah, exactly. That's it. It really makes you think about it, doesn't it? But no, it's just a good old comfortable chat that hundreds and thousands of people listen to. So
Love it. Love it.
that's awesome. Thank you so much for that, Andrea. We can't wait to have you back.
Awesome. Okay.